everyone, and welcome back to Today in Finance. In this video, we're going to talk about the 5 stocks that Bank of America believes have extra room to run before they report earnings. And when an institution like the Bank of America highlights certain stocks, it means that in their view, the potential for upside hasn't been fully priced in dollars. So yes, there might be some movements upwards ahead of earnings, but this isn't a guarantee of success, because every investment has its own risks. With that being said, let's start this video with stock number 1. Okay, so the first on the list is Generac Holdings. Bank of America sees this company as having an additional upside because the demand for their products is strong and the market hasn't yet fully noticed the improvements coming ahead. So if Generac reports better than expected earnings or gives positive future guidance, its stock price could rise even more. Second is the Lithium Americas Corporation. This company is in the lithium mining space, so it's exposed to trends like electric vehicles and battery storage. Bank of America believes that the market may underestimate the extent of demand of those trends, giving LAC potential room to run before it reports earnings. So if the company shows growth or better margins, the share price may respond accordingly. Third is Wayfair, which is an online home goods retailer. Here the story is that despite some headwinds in the retail, Bank of America thinks that Wayfair has an upside because things like online shopping trends and home goods demand might be stronger than what it is already priced in. So if the number comes in better than expected, the stock could definitely move up. Fourth is Teladoc Health, which is a telehealth company, and Bank of America's view is that telemedicine still has growth ahead and Teladoc may be positioned to grow. So if the company shows stronger utilization, better operating metrics, and improved margins, this stock also has room to grow. Okay, so the last one on the list is Pinterest, which is a social media platform, and Bank of America sees potential upside because Pinterest may be undervalued in terms of engagement growth and monetization potential. So if the company can turn this engagement into revenue growth, you guessed it right, the stock will definitely go up. Now, it's important to highlight that having room to run does not mean guaranteed returns. Some things to remember are: earnings can disappoint. Even when the setup looks good, that can send a stock lower. Market expectations matter. If a company has already been flagged as having upside, some of that may already be priced in. Shares tend to be more volatile ahead of earnings, so if you're holding through that, you should be comfortable with bigger swings. Last but not the least, external risks like macroeconomics, regulation, and competition can spoil a good story quickly. So, what do these companies share? Well, according to Bank of America, each has a combination of favorable conditions, some catalyst ahead like demand trends or monetization improvements, less than fully priced potential, and upcoming earnings where a positive surprise could move the share price. In investor terms, the risk-reward might be titled a little more towards reward than usual. So this means that investors can choose one or more of these companies and keep an eye on them as their earnings reports come out. If you trust the company's success story, you might decide to hold the stock during that time. But remember, there are always risks involved, so you have to be careful. With that being said, this brings us to the end of this video. I hope you found it helpful, and if you do, make sure to give it a big thumbs up and subscribe to my channel for more financial insights. Thanks for watching.